Welcome back to Halftime Report. Joining us on the show now is Peter McGuire. Peter, hi. And 24 hours to go for the OPEC and allies meeting. And I don't think we've waited so long for a meeting in last many months because we've almost known on what would really happen. But this time around, the kind of short covering and the $8 jump that we've seen in crude prices in conversation about this meeting, is it going to be buy the rumors, sell the fact, or do you think OPEC and allies would actually come out and cut that much?
Well, that's the debate, Manisha, and we're sitting here. We had such a big build on yesterday morning. The markets went wild, and maybe that's going to be a continuance over the next couple of days. So I'm thinking, yes, I'll put my hand out there. Will they do close to 1 million? I won't be surprised, and I think that's what most analysts are anticipating.
So, let's put it in as a case study then, Peter. If 500,000 barrels of an output cut is what OPEC does, how do you see the prices reacting to that? Or do you think 1 million barrels, because it is factored in, you could actually be looking at some profit taking? How are you reading the numbers here?
I think 500,000, Manisha, would be underwhelming, and I feel as though that the price will probably, I'm not saying tank, but I think they'll give up some of those gains by a couple of bucks. If they do the million, and that really sets a line in the sand, I wouldn't be surprised to put maybe another $1 or $2 on in the short term. So it's pretty wild to say how far it'll go because I'm worried about US dollar as well in that over the next matter of a week or so.
And how sustainable do you think this rally is? I mean, as you're saying, a couple of dollars more perhaps. So we're not even looking at $95 per barrel in the very near term. So how do you look at the new range and how sustainable is this rally?
Well, first off, I think the range is going to be that, low 80s to maybe you might see an 88, 89 for, pardon me, a 91, 92 for Brent. It's currently at 89.33, so it'll go up a couple of bucks. But that's as far as a range. Maybe you might go a little bit higher, but I just think that there's enough issues out there as far as that inflation story really creating much concern on Main Street. And that really is the temper of the market at the moment.
Peter, as you said, the demand is a major concern here, but we did see a lot of sell-off because of macro as well, the dollar index being the major reason here. So if the dollar continues to decline, how would you look at the demand on the other side?
Well, if the dollar comes off, Manisha, if it came off back to 105, then I think that there would be certainly a push up as far as price. Demand, that softer US dollar would be a good sign for many of those other currencies, be it pound, euro and yen to start with. So that's going to be a plus. But does that happen? Because I still think that Jay Powell's got a couple of tricks up his sleeve, and I won't be surprised to see another 75 basis points or another 2 from the Fed over the next couple of months.
Also, how are you looking at the European Union's impending ban on 5th of December? Has the market factored that, all of that in?
Well, it has to a certain point, but that's still it's a little bit further out, and I think that there's enough concern on many other issues that impacting market. You've got the North Korea situation, you've got what's happening with naturally Ukraine and Russia. So there's so many moving parts to this whole equation that needs to be discussed and really, worked through until we get to even that point with Europe.
So, I mean, as you said, early 80s and early 90s is where we could be looking at the crude oil prices. Does that improve demand going forward? I mean, are we looking at that at all in this quarter now? Because we do understand that we're working with a deficit of around 0.6 million tons in the global markets right now. OPEC output is nearly 2.9 million short of what they have agreed to. They're looking to cut some more. How are you matching all of these puzzles?
Well, when you've got to try and work it through, yes, I feel as though that there will be concern there from a demand destruction standpoint if we roll into winter and we get prices up higher from here and that inflation story doesn't, abate. So if we've got 11 or 12% or 13% inflation into Eurozone and UK by Christmas, then that really is going to impact Main Street.
20% of decline in the previous quarter. How do you see this quarter ending?
That's 3 months out. We've got a midterm election. That's a hard question, Manisha. I think it's going to be around this sort of level unless we see something dramatic happen, an unknown or a surprise to enter the market. We've just lived through Hurricane Ian, it decimated Florida. If we get a couple more bad storms, that's going to impact US. Then you're looking at what happens as far as other geopolitical concerns globally. So, yeah, I'll go out there and say, first off, I want to know where the US dollar is, and we don't know. And the second part is it could be up or down another $10 from where we are currently.
All right, Peter, Manisha, thank you so much.
That's how you started.
On that note, what we'll do is we'll take a break on this edition of Halftime Report with, the markets are looking good.